U.S. stocks end lower on Monday, but the futures rise sharply after President Donald Trump delays plans to impose trade tariffs on Canada and Mexico. The Canadian dollar and the Mexican peso strengthen against the greenback. Asian markets rise in early trade as Trump announces reversal of sweeping tariffs. Stocks and non-dollar currencies claw back gains. The GIFT Nifty is indicating a gap-up start for our own markets. Oil prices ease as the U.S. halts tariffs on two of its biggest oil suppliers. The NYMEX slips to a one-month low, while Brent is now hovering around $75 a barrel. In key earnings today, Asian Paints is expected to report a weak quarter with a 3% decline in revenue and margins likely to slip to 18.5%, while for Titan, revenue is seen rising by 28%, aided by festive and wedding season demand and the rise in gold prices. And DIPAM Secretary Arunish Chawla highlights a calibrated asset monetization approach when it comes to public sector units, while Revenue Secretary says that the new direct tax code will have only half the text of the current laws and words like assessment here will vanish. Good morning. You're watching Power Breakfast here on CNBC TV 18 in the Mumbai News Center. I'm Hormuz Fatakia. Well, the screen looks completely different from what it looked just 24 hours ago. What was a sea of red now is a bit of green that you can see on your screen, particularly in the Asian markets as well. After the reversal of the tariffs by Donald Trump overnight, the Taiwanese index 0.6% higher. The Hang Seng trading with healthy gains as well, with close to around 1.75%. The Chinese markets, though, are still shut for trading. They will resume trade tomorrow, and the 24-hour window might just see conversations between Donald Trump and Xi Jinping over the impending 10% tariffs on China as well. But all of these dramatic developments took place overnight because Wall Street ended Tuesday's trading session in the red, but there was a steep rebound from the lows of the day, and that was after Donald Trump said that tariffs against Mexico would be paused for a month, and the same for Canada as well. The Dow Jones ended 120 points lower, but that is after a 550-point rebound from the lows of the day. The S&P 500 ended around 0.7% lower. The Nasdaq also was the underperformer of the day, ending around 1.25% lower, but that was after recovering almost 250 points from the day's low. Donald Trump confirmed these deals on his platform Truth Social, where he wrote that Mexico's president has agreed to deploy 10,000 Mexican soldiers on the border, and just a few hours ago he also confirmed the same on Canadian imports as well. Take a look at this report.
President Donald Trump backed away from his threat to impose a steep 25% tariff on Canada for 1 month, according to Canadian Prime Minister Justin Trudeau. The decision came after the two leaders had a phone call that Trump said went very well, during which Trudeau promised to deploy new technology and personnel along its border with the United States to stop the flow of fentanyl. Just hours earlier, Trump also paused a planned 25% tariff on Mexico after President Claudia Sheinbaum agreed to send 10,000 National Guard members to the border to stem the flow of illegal drugs. She told reporters on Monday the agreement included a U.S. commitment to act to prevent trafficking of high-powered weapons to Mexico.
I told him we wanted him to pause the tariffs, so we reached that agreement. But I also explained to him that the amounts of high-potency weapons that enter from the United States into Mexico is a serious issue.
Trump said Mexico sending soldiers to the border would stem the flow of narcotics, fentanyl in particular, as well as curb illegal immigration.
He asked me how long I wanted to pause tariffs. I said forever. He told me how much time. I told him a month. But I'm sure that during this month, we'll be able to deliver good results for his people and the people of Mexico.
Trump said the month-long suspension would be used to engage in further negotiations. U.S. tariffs on Mexico, Canada, and China had been set to take effect at midnight on Tuesday.
Well, and if Donald Trump was later asked if anything similar could be expected for the 10% tariffs imposed on China, this is what he had to say.
China will be speaking to China probably over the next 24 hours.
On fentanyl in China, President Trump?
We don't want fentanyl coming into our country. Now, we had another big thing, speaking of China. China's involved with the Panama Canal. They won't be for long, and that's the way it has to be. What I have discussed is we'll have some good meetings with China. We have meetings planned, and we'll see what happens. But that was just an opening salvo. If we can't make a deal with China, then the tariffs will be very, very substantial.
Let's also listen to what Jefferies' chief market strategist David Zervos had to say on the tariff pause and the way the market reacted to the news.
We're starting to know that the Donald Trump era is upon us, and there's some certainty to the chaos. And I think that's just going to slowly become the norm here in the market. We're going to wake up and there's going to be a tweet, and we're going to get a Fed meeting. You saw that on Wednesday, and after the Fed meeting, there was a tweet. The tweet seemed to move the market even more than the actual statement or the press conference. We have the tariffs coming in. So I think we're going to get used to this. We've kind of had 4 years of a very quiet administration, an administration that did not seem to involve itself in the day-to-day of markets. And this one is exactly the opposite. We were there in 17, 18, and 19, and obviously in 20 with COVID, everybody was all hands on deck. But I think we'll get used to it, and I think we'll understand it, and I think the markets are actually taking this all really well. I don't want to go too far out on a limb, but I think there's a lot of controversial views about what tariffs really mean. Some people have very strong views about inflation, others don't. I think the economics profession has some biases there, but we saw 17, 18, and 19, we saw tariffs, we saw this movie, and inflation went nowhere. So I think there's a lot of people who actually kind of want to see it happen and kind of watch the data as a result of it. We'll see how it goes. But I was kind of happy with the market reaction, to be honest with you. I thought the bond market did what it was supposed to. Stock market took a little bit of a hit, not a huge one, bounced back. And then, of course, as we got some clarification that some of the requirements that the president was asking of trading counterparties in Canada and Mexico were going to take place with vis-a-vis the border, the tariffs were lifted, at least for 30 days.
Well, the markets seem to have indeed taken it very well. The Nikkei is up almost 1.5%. The Kospi is up close to 2%. The Shanghai Composite, of course, they'll start trading only tomorrow. So, but it's a green screen across the Asia Pacific. And pull up the GIFT Nifty as well. That'll give you an idea of how our own markets are likely to start off. Well, it's a gap up, 100 points so far. So, most probably recovering all that we lost in yesterday's trading session. At least that's what the implied open is suggesting for now. But let's now get you more cues on how all of this overnight action impacts our own market. Our research team is joining in with the trade setup and the stocks that are likely to be in the news. And of course, the scheme on the FNO side of things as well. First up, Vinny joins in to get all the market cues you need to watch out for. Vinny, good morning. It's a completely opposite screen from what it was yesterday, but what's the trade setup looking like?
Absolutely, completely opposite screen, because yesterday was a very volatile session. We saw a gap down start coming in for the Indian markets. Whether you look at the Nifty, sensex, mid and small cap closed in the red, though they managed to recover from the day's lowest point. So that's an interesting bit that we're keeping an eye on. Mid cap and small cap yesterday were the underperformers versus the benchmark indices. Now, FII and DIIs, when you look at FII, they continue to sell for the 23rd session. So FIIs yesterday sold at around 3,958 crores. DII continued to be buyers in the market. What we're watching out for today, we have an IPO listing, so keep an eye out on that one. We have Dr. Agarwal's Healthcare that is listing today on the bourses. Other than that, the tariff trades that are going on around, what is happening on that front, keep updated with that one, because that is impacting the global markets and some bit of an uncertainty that comes around that point. Indian rupee, that's also an important one to watch out for. Yesterday, we saw a bit of a depreciation coming in Indian rupee versus the US dollar, so key to watch out for that. Earnings continue to be important candidates. Today, we have Asian Paints as well as Titan on the Nifty front that are reporting their numbers. So keep an eye out, close eye on earnings, and a lot of movers on the back of earnings. Nifty implied open, like you indicated, is indicating a gap up start today. Almost 100 points up as of now is what the indication is coming in. Let's see if it's going to be sustaining those levels, or do we see a fall coming in for the Nifty is key to watch out for.
The bulls will certainly be hoping that it sustains. Vinny, thanks a lot for that. Over to Vamakshi now. List out the stocks that you need to keep an eye out for today. Vamakshi, good morning. What's on your list?
Well, good morning, Hormaz. Lots of earnings on my list today. Power Grid is the first one. Revenue sees a decline of almost 3%. Margins have contracted from 88.5% to 84.9%, and the net profit is seeing a fall of almost 4.1%, and it's a miss across the board for this company. KC International, on the other hand, reports a margin uptick from 5.2% to 7%, and the net profit is is seeing a strong growth of almost 34%. Tata Chemicals, on the other hand, when we look at the revenue, is down nearly 3.8%. The margins have contracted from 14.5% to nearly 12%. The company has also reported an exceptional loss of 70 crores, which has led to the company reporting a net loss of 21 crores as compared to a profit of 194 crores. HFCL's revenue dipped by 2%. The margins have improved from 11.3% to 15%, but the net profit is down nearly 10%. NLC India also in focus on the back of its numbers. The revenue is seeing a very strong growth of almost 39%. The margins have shown a very substantial improvement of from 28.6% to 41.4%, and the net profit has more than doubled to 668 crores. Castrol India's revenues saw an uptick of almost 7.1%. The margins have improved from 26% to 27.8%, and the net profit is showing a very strong growth of 12.2%. And lastly, keep an eye out on Premier Energies, and that is because revenue has more than doubled to 1,713 crores, and the net profit has jumped multifold to 255 crores.
Akshi, thanks a lot for that. Plenty of earnings reactions to watch out for, and of course, two major names reporting results today being Asian Paints and Titan. Keep an eye out on those names as well. Lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, good morning. Well, yesterday's session was not as bad as feared. Managed to hold on to key levels, but what's the FNO data indicating?
So yesterday we saw market reacting to US imposing tariffs on Canada and Mexico, and that led to a big fall in the market, especially in broader markets. Mid-cap index has fallen almost like 1%. But today, that was yesterday. What about today? Now it's going to react to reversal of that decision, or say basically that decision being paused at least for a month. And now look at GIFT Nifty, it's indicating a gap up start, currently up around 100 points. Now coming on the flows, in the cash market, FIs continue to remain on the sell side. Yesterday also they have sold nearly 4,000 crore, while DIs have bought nearly 2,700 crore. Even in the future side, FIs have sold nearly 1,700 crore, and they have reduced long positions by 3,500 contracts. At the same time, they have added short positions by 6,300 contracts. And now their FI's long exposure has reduced to 10%, which is the lowest level that we have seen at least in last 2 years. On the client side, long exposure remains healthy. It's around at 71%. On the option front, in the call side, 23,500 call has seen addition of nearly 47 lakh shares, and 23,600 call has seen addition of nearly 26 lakh shares. On the put side, 23,300 put has seen addition of nearly 19 lakh shares, and 23,100 put has seen addition of nearly 9 lakh shares. Important levels for Nifty, support is now at 23,250 and resistance is now at 23,500. Stocks in focus, two stocks, Samvardhana Motherson and Sona BLW. You know the reason, reversal of tariff. And second, DVs. Yesterday, the company had announced the result, and the results were healthy. And after in the con call, even commentary looked healthy. So keep an eye on these stocks.
Oh, absolutely. Samvardhana Motherson and Sona BLW, the big losers of yesterday. It'll be interesting to see how the tariff reversal leads to a reversal in their losses as well. Take a short break. Up next, we get you excerpts from our conversation with experts from the budget verdict. Stay tuned. Back on the other side. Back with us here on Power Breakfast. Now, DIPAM Secretary Arunish Chawla highlighted a calibrated asset monetization approach when it comes to public sector units. Speaking at the CNBC TV 18 budget verdict program, he also said that the government hopes to monetize land assets of BSNL and MTNL in FY26. Revenue Secretary Tuhin Kanta Pandey also said that the PSU dividend strategy is aimed at being consistent and not maximization of revenue. Listen.
Really look at the dividend, as Arunish mentioned, we are looking at consistent dividend, not maximization of dividend. Because if you maximize the dividend, you basically evacuate the money out, and then it doesn't help for growth of the company. So there is a consistent dividend policy, and consistently also the targets of dividend are being met.
We are going to help MTNL and BSNL in monetizing whatever assets they have, so that the value that is locked in can be redeployed, the liability is cleared, and we can re-energize the sector.
And do you expect that to go through within this in the next financial year, FY26?
touch wood.
Touch wood. Okay, that's an important headline.
Now, the new direct tax code will only have half the text of the current law, and words like assessment tier will vanish, according to Revenue Secretary. And the CBDT chairman also said that the new legislation will be simpler, inspired by similar exercises in the UK and in Australia. Now, the new law is scheduled to be introduced in the Parliament later this week.
You know, we are making a very sincere attempt. This particular thing, in other sovereigns also, this has been attempted. Some people have taken years, 4 years, 5 years, to change the new law, to rewrite the law. We had some groundwork earlier in some committees which they did the work. But this work, this piece of the work, bringing it has been done in about 6 months. So, obviously, you know, while we will say that we have done a great job, we don't know. I mean, so we have to, the suspense is, the jury will still be out.
Yes, the jury is out and we'll have to wait for you to actually bring the bill.
But what I can say is that the words will be halved, chapters will be halved.
As a result of this entire exercise in this 6 months, the act has been now, the proposed act would be about half. I would not say exactly half, but it will be about half. It will be about half because we have to take care of different situations, you see. The shift in approach is that, well, we have taken some provisions which were elaborated in the base act to the rules also. And also we took inspiration from the similar exercise which was done in other sovereigns. For example, UK, Australia.
And India is on track to sign the largest number of contracts, according to the Union Defence Secretary Rajesh Kumar Singh. And he also said that the government needs to ensure that contracts triple compared to last year. Now, when asked about Donald Trump's message asking India to buy more defence equipment from the US, Defence Secretary said that India is willing to procure more from the US if they meet requirements on quality and indigenization.
We are on pace right now to sign the largest number of contracts ever in our history. Okay. The largest last year was another high of 1,08,000 crores. This year we've already hit 1,15,000, and my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. And we intend to ensure that order books are full across the board in the defense industry so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that their order books are full for the next 4 to 5 years and everybody is on the same page when it comes. We do have some procurements which are on the anvil where American companies would be in the picture. And as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course we'll be, those are carrots that we will be able to dangle before the Americans. We are already, meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
Important cues coming in for a lot of these defense companies that have been bearing the brunt of some intense selling pressure over the last 2 trading sessions. We'll take a short break. Up next, we get you cues from the commodity side. Stay tuned. We'll be right back. Welcome back, and Manisha Gupta now joins in with all the cues from the commodity space. Manisha, good morning. It's a dramatic reversal overnight. Are commodities reflecting the same?
Well, yes, they are, with U.S. putting 30-day pause on tariffs against Mexico and Canada. And as of now, going through with 10% tariffs, but you don't know how that would change as well. But the markets clearly have reacted to this. You have the crude oil prices declining to a 1-month lows as the U.S. delays tariffs. There is a bit of an uncertainty, of course, after OPEC and allies have continued with their existing oil production plans in a meeting yesterday. When it comes to metals, well, we are looking at some support here, especially with a 30-day pause on both the countries. The 10% tariff on China takes effect today, unless there is a different kind of an announcement coming in from there as well. The metals also are looking at China factory activity that grew slower in January. China resumes trade today, remember, after the Lunar New Year holidays of 1 week long. And there's a bit of a buying that we've seen after China come back. And the expectation that China could be coming out with a rate cut soon and also some more stimulus measures is what seems to be supporting the metal prices right now.
All right, Manisha, thanks a lot for that update. Important cues coming in from the commodity side, with oil prices falling to the lowest level in a month after that tariff reversal from Donald Trump. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call sets you up for the day's trade.